Hello and welcome to the Crypto Beat. My name is Kelvin Sparks. This is my co-host Tim Copeland, head of growth at The Block. Joining us today, we have Michael Marcantonio, director at Galaxy Digital, and Matt Blumberg, head of DeFi at Ondo Finance. Welcome to the show. How are we all doing?
Doing good.
Doing well. I'm also the head of DeFi at Galaxy. We got the two head of DeFis on. There we go.
Cool.
Yep.
Nice. We can party like it's 2021 again.
I sure do hope so. But before we get into the fun stuff, let's get a quick word from our sponsors. It's a new chapter for crypto and digital assets. Institutions are flooding in, regulators are defining clear pathways, and capital is moving at warp speed. Are you ready to level up? Campus is the digital gold standard in crypto education presented by LMAX Digital. Master the skills you need to thrive in this new crypto era. Head to theblock.co/campus to get started. All right, so let's get into today's episode on the surge of RWAs and AI and tokenized equities with Galaxy Digital and Ondo Finance. So we had some very interesting conversation in the studio as we were getting ready to go live here on escaping the permanent underclass, AI, and RWAs. I guess we heard some of Michael's opinions. Matt, I'd love to know yours just on those broad strokes.
Nobody's ever asked me to share an opinion before, so I really appreciate it. They usually just have to deal with it. Yeah, I mean, look, from our perspective, I think we tried to build a lot of our products such that they'll be like immediately usable for building on top of. And in a lot of cases, people think about the DeFi perspective, like money, Legos, building blocks, etc. And I think in a lot of ways, like we sort of had this dream that like people would rearrange all these money Legos into like new and interesting financial products. But I actually think that people aren't going to be the ones rearranging them. It's going to be AI, right? It's going to be these machines that have the ability to keep multiple interesting atomic primitives in context and then optimize accordingly. So like kind of what I was saying a little bit earlier before we started going live is for your average person, they do a lot of things that they know are not like the right thing to do for their personal finances, right? And personal finance is a little bit like going to the gym, where it's like sometimes you do it, sometimes you don't, but you always know someone who's better at it than you, right? And you never are going to be like totally perfect because you wouldn't be human. But you don't have to be human. You could be an AI, right? You could have an AI running your personal finances for you, optimizing your portfolio according to your risk needs, right? Your like liquidity requirements, and you can kind of have something that handles all of the annoying little parts for you. So buying and selling money market funds, right? Depositing stable coins into vaults, buying and selling equities, right? Hedging yourself out on perps, moving to like different perps exchanges when like funding rates are better or worse, right? All of these are things that like make sense at scale. Like if you're running a fund and your job is to do things like stable yield, like that's your job, right? You might have multiple people that log in every day and look for the best possible sources of like risk-adjusted stable yield. But if you're an average person like me, you probably just have like stable coins on the blockchain, right? And you're just kind of waiting to buy the dip. But in the meantime, it would be like, there's no reason you shouldn't squeeze out another 3 or 4% if like I'm waiting 6 months and I think I can earn that in 6 months to like buy the bottom on Bitcoin. Hopefully the bottom's in, but in case it's not, it's good to earn yield in the meantime. It's good to optimize your portfolio in the meantime. And I think in a lot of cases, the tokenized versions of things are not just like better because people can access them that couldn't otherwise access them. They're also better because AIs can access them, right? And there's sort of this like level playing field and like, super high liquidity, seamless, smooth, sort of primitive that all of these, bots can play with. And so I think the same way that like AI is going to quietly, optimize things like how much you're paying for coffee by like ordering beans from the cheaper place where like you would just always order from wherever you usually order from. I think it's going to be very similar with like financial products. And I think the average person is going to benefit a lot from things like this, right? So yeah, I mean, I think it's like a very important use case for AI. And a lot of times we assume that like the only reason you would hold, tokenized equities over something else is like either you want to keep your money on chain or you don't want to KYC or like you want to use it in DeFi. But there's actually like this huge use case of like you just want a bot to be able to do it without having to give that bot access to your entire brokerage account, right? And so you give it API keys over a wallet or you give it like X402 permissions or something, and the intersection actually becomes pretty broad at that point.
Understood. And Michael, you had some really fun doom and gloom takes on AI that we were talking about behind the scenes. Maybe to start out, firstly, did you take a look at the Citrini article, and did that either reinforce or negate some of your bullish or bearish takes?
Well, I think that AI. I mean, I'm head of DeFi at Galaxy. Galaxy is both a crypto company and an AI company. We own one of the largest AI data centers in the world. And so we are really at the forefront of both AI and crypto. We've obviously been in the game on crypto for over 8 years, spanning asset management, banking, trading. And frankly, we're very excited about AI. Now, there's definitely questions about the future of work and what it's going to mean when AI is sufficiently intelligent, such that it can do everything better than the whole of humanity combined. I don't think we're there yet, but we probably will be there faster than many of us anticipate. And I don't believe our government is necessarily prepared or capable of addressing the challenges that will come from AI. But I do believe DeFi is, and I do believe crypto is. I think crypto is a necessary element that our financial system must adopt in order for the well ordering of financial markets in the future, especially with respect to AI. AI actually will run much smoother if financial markets are migrated on chain, because there will be orderly rules, it will be transparent, it will mitigate systemic risk much better, and it will be an open system for all. And in that environment, I think AI will be able to adapt and serve humanity a little bit better than the current trajectory that we're on. But I oscillate between being bullish for humanity versus bearish. I can't tell.
Understood. And I guess maybe before I pass it off to Tim, one question I had for you, Michael, is what's the first thing you would do if you had your Claude bot or OpenClaw insert various AI like ready to go on chain for DeFi use cases?
So the first thing that I recommend that everyone does with AI is figure out how it can hedge your portfolio. Retail is just not that good at hedging. Retail is going to run to use AI to trade prediction markets and make sports bets and everything else. But a really good use case would just be, if you've got a bag, train your AI to hedge that exposure so that you don't lose money, like a proper hedge fund does. Most people look at hedge fund performance and they say, "Oh, it didn't beat the S&P. Hedge funds didn't beat the S&P this year." But actually, most hedge funds aren't supposed to beat the S&P. They're just supposed to protect capital. And so train your AI like a hedge fund and protect your capital.
Michael, let's not go telling people to train their AIs to sell, okay? That's not what the market needs right now. Okay. Let's back up for a second here. Maybe we wait like a couple years and then we train the AIs the AI should be hedging at the top of the market anyway, right?
Yeah.
But yeah, I mean, I guess like from my perspective, so I've been toying around with a lot of this stuff, and even just like in crypto markets, like you can give your AI like access to like trade only API keys that like can't withdraw your capital, can't transfer it, whatever. on like many exchanges, including Hyperliquid. And I set mine up to be an OTC guy, right? So I text it like, hey, I want you to go long or short however many units of whatever coin over the next however many hours, and I want some jitter. I don't want it to be obvious to the market. I mean, I'm not trading size, right? But like if I was, I like to think I am. So I'm like set up some randomization, drop some slices, whatever. And it's amazing. It texts me like, you got it. Like, I'll keep an eye on that for you. And 30 seconds later, it's like, all right, order is running now. It'll be done by this period of time. And 15 minutes later, it's like, it's a quarter of the way done. Like, do you still want to do this, right? Like, we've been executing at this average price, not that much slippage. Like, you used to have somebody on the other side of every trade, right? Like a human sitting there watching the market. And I can tell mine now, hey, like when this token, see how it's in this like upward channel? I don't think it's going to last. I want you to short it when it breaks through the bottom of this channel. And it does it. It's amazing. So I think like it really does empower people to operate like a hedge fund, to your point, right? Like not just from the hedging side, but from just like operational excellence perspective.
Absolutely. And it's an open question about whether how the markets will function. I think they will function better if everyone is trading through agents, frankly. I think there'll be actually less jitter and it will be a better functioning market. I'm pretty excited about that possibility. You're going to see AI agents get in the hands of many people very quickly on DeFi to trade, if not already. And I do think that it's very liberating to be able to have an agent that can trade for you. I mean, if your agent can protect your money, if you have money, and if you're Gen Z, if it can make money for you, then you are your own boss, right? You control your destiny, and you're behaving as responsibly as you possibly can, assuming that your AI is sufficiently adept at trading. Which, like Matt said, these AIs are pretty. These agents are pretty effective at trading so far. So it's pretty exciting.
When you say the agents are pretty effective at trading, I saw there was an example where all models were given access to Hyperliquid, and I think nearly all models have like lost money from that. Are you just using standard LLMs? Are you training them specifically?
That's when they're not on my data. When they're not trained on my data, they do well.
Well, let me give it
on mine, and they're extremely effective at losing money.
Sorry, they're effective at trading. Whether or not they're performant is a separate question. I will say though that all the best traders on earth, Renaissance Technologies, Two Sigma, D.E. Shaw, they all have been trading with AI for years, right? Like they also trade with AI. Now, whether they're LLMs or mean reversion or, any other sort of model, that's an open question. But the fact is that like high frequency trading has been using machine learning for decades. And now LLMs are simply, they are simply giving that power to the masses. AI will always be better in the hands of a giant company that has a lot of capital and a lot of expertise. But I do think there's going to be a narrowing of the edge over time between the big trading firms and retail.
Understood. And I guess now to take this conversation even a step deeper in the weeds, what are these AI agents going to be trading? One of the hottest, I guess, Cambrian explosions we saw in the past few months was HIP3 perps volume. Absolutely went parabolic. And with that, I guess one of the inspirations from this podcast was the Ondo Summit, to which RWA perps were unlocked. So, Matt, I'm curious, like, what do RWA perps do for the Solana ecosystem? And then just any general thoughts you want to add from the Ondo Summit there.
Yeah. So to clarify, you'll be able to use Ondo perps by depositing stables from a lot of different chains. Ethereum and Solana, I think, are the first. Look, Ondo perps are actually like the perfect example here for how AI can help people trade better, because they're much more capital efficient relative to HIP3, right? So we've seen like there's obviously like huge demand on the HIP3 side. It's been like incredible to see how well that ecosystem has done. And we obviously thought a lot ourselves about whether we wanted to do HIP3, whether we wanted to partner with one of the HIP3 protocols, right? or whether we like genuinely needed to build something ourselves. And really the piece that kind of pushed us over the edge to build something ourselves was this idea of using tokenized assets as collateral assets. So the way it works in most Type3 markets is you post your stables. Sometimes that's, most of the time it's USDC. Sometimes it'll be like USDH, right? But like it's always stablecoin collateral on the perps exchange. And then imagine you're like making markets and you need to like hedge a short position on the perp. You need to also have cash at a TradFi brokerage or USDC on like another perps exchange to hedge yourself out, right? So, you know, everybody has a different tolerance in terms of like how much, you know, volatility they're willing to stomach. But say you're only willing to take 1x leverage. So you have 100 USDC at the exchange for every $100 worth of liquidity you're posting into the book, right? You get filled on that $100, and now you need $100 cash at your brokerage to like hedge yourself out. So for every $100 in the book, now you have $100 collateral here and $100 cash at your TradFi brokerage, right? It's pretty capital inefficient. And like, sure, some people want to do 2x leverage or 3x leverage, but the point still stands that it's always twice as capital inefficient. Even if you're willing to take on leverage, you know, and do $200 here, you still need $100 here and $100 here, right? With tokenized equities as collateral assets, you effectively remove this entire TradFi leg, and you 2x the capital efficiency of what you're able to do when it comes to hedging yourself as a market participant. And this isn't just for like market makers, right? Market makers are important because their cost of capital is a big part of what contributes to the overall just like cost of trading, whether that's like how much depth of liquidity you have, what the funding rate is, right? What the spreads look like. All of that relies in part on capital efficiency of the market maker, but it's also important for people that just want to farm yield, right? So you look at like an Athena style cash and carry trade, and it's not super efficient. Like for them, it's super efficient because they can post staked ETH as collateral to short ETH perps, right? That's how they collect the funding rate. They've expanded into other assets too. For RWAs, they would have to have cash at a broker. They'd have to have USDC sitting at the perps exchange, and it would be twice as capital inefficient. So if you're trying to farm funding rates, which does a really important thing, right? It pushes the price of like the order book back toward the actual like mark price of the asset. So that's really important for market functioning. You're twice as efficient at doing that if you can post tokenized collateral. And so this is the whole reason why we decided that we needed to go out and build this ourselves, because we saw other ecosystems, and they, including Hyperliquid, and it was either just not on their roadmap at all or like very, very nascent. And there was no way for us to feel assured that like we would be able to get the overall amount of capital efficiency that we know is needed in order to make these markets actually like a place that has true price discovery the way that TradFi markets do. Right? In TradFi, all of this shit's like out the window, right? You have T+2 settlement. You can buy a share on this exchange. You can sell a share over here. You don't have to have cash on this exchange. You don't have to have the share on this one. You settle the next day or the day after, right? And your prime broker gives you access to things like margin at like a very reasonable rate. But in crypto, because of the permissionless nature and because people aren't KYC and you don't have counterparty trust and whatever, like you actually do need to focus very deeply on capital efficiency. And I think that's somewhere that we've done a really good job. But this whole thing is sort of underpinned by this highly liquid spot market that we have, because if you're going to have multiple collateral assets, you need to be able to liquidate them. And so the reason that we're like especially like enabled to like actually build this product is because we have a super liquid spot market sort of underpinning it. So that's kind of my monologue, but basically getting back to AI, normally people would just kind of trade out of habit. They'd be like, I want to put a $10,000 long on gold wherever, right? They go to app.hyperliquid.xyz or they open their Binance account and they just trade wherever they already have cash, because it's a pain in the ass to bridge. It's a pain to withdraw. It's a pain to figure out which market has the best spreads. But the agents are going to be like, oh my God, like the market structure here is so much better because like market makers are more capital efficient, the spreads are tighter, the liquidity is deeper, funding's better. Like they're always going to be able to route you to the marketplace that has the best possible structure, right? And so in the pre-agent era, Ondo perps becomes like this extremely efficient place for like pros or prosumers, right? People that are hedging out positions on other perps exchanges, people that are trading like really large volume. But in the post-agent era, it's actually like a better product for everyone.
I think if I could ask a question, I think it would be helpful for the listeners to, because the product is still pretty new. Can you just explain how your perps are going to work?
Yeah, it's very, very similar to like any RWA perps protocol that you've used before or heard of before. So some of them are a little different. Like Ostium is quite different because you're basically facing off against OLP. So we'll set that one aside. It has its challenges and it has pros and cons, right? But we'll set that aside. It's most similar to something like a HIP3, trade.xyz market, where it's a perp on an RWA, right? There's a central limit order book. There are market makers taking the other side of your trade, hedging it out on TradFi or hedging it out using tokenized assets as collateral. And it's effectively exactly what you think it's going to be. The improvement
Book is, are you guys controlling the order book?
Yeah. Oh, I guess I'll leak some alpha. This is cool. Nobody's ever really asked these questions. So it's somewhat similar to a centralized exchange in that it's run in a secure enclave. So that's like a single server, but you get some safety guarantees from this enclave because like the keys to the enclave are decentralized. So you get some degree of like safety and decentralization from that, where like the exchange can't just like push malicious code single-handedly. There are attesters that have to sign off on every code update. And so you have this like decentralized network that is like responsible for the thing, running good code. So they can't so the exchange couldn't like reappropriate user assets, even if they wanted to, because it would require pushing a code update that the attester network wouldn't sign off on. You can kind of think of it as like an off-chain smart contract. Like I know that sounds really marketing heavy, right? But like I actually think it's a reasonable analogy where it's this piece of code that performs as expected, right? And can only be updated through like a multi-sig action, basically. And so it runs in a centralized server. And this is like kind of V1, I think, of the architecture, but we wanted to get this out quickly because we can see the potential of RWA perps, and we think our solution is much better than the existing, markets. And I think the part that got us nervous is like, if people are getting ADL'd left and right because the liquidity is not there, and people don't know when they place a trade if they're going to get paid for being right, then ultimately RWA perps, people are going to kind of relegate them to like something that sounds good but like doesn't work. Or like doesn't work in practice, or like toy markets, right? And I think they have the potential to be much better than that, right? They have the potential to truly be a link between crypto traders and the TradFi markets, which are like extremely liquid. And so we wanted to push this thing out quickly so you can argue about the pros and cons of, a centralized server doing the sequencing or whatever.
And they settle on every chain?
So what is settlement, right? You can think of it like, like I do think this is like a reasonable question to ask because like I used to work at Polygon, right? And when we like rolled out Polygon ZK EVM, one of the biggest apps that people wanted to build on it were perps dexes, but it was never really transparent what actually the chain is being used for. And is it just like posting a hash of like the state of things, or is it like posting some metadata? Somewhat similar to like what are L2s actually using Ethereum for, right? It's a reasonable question, and like people have incentives to like work around it, but I don't, because I'm pretty straightforward. So basically the chain functions similarly to how the chain would interact with a centralized exchange, right? You can deposit, you can withdraw stablecoins. There will also at some point likely be like a swap feature where like directly from within the app, once you've deposited your stables, you can use them to buy and sell spot tokenized equities. And that's really for hedging, right? And that part will likely go through a chain. So it could be Solana, that's like a pretty reasonable starting point because it's so efficient. It could be a cheap L2, it could be a cheap EVM compatible chain like Binance, like BNB chain, right? But the chains very much exist as this like deposit withdrawal like layer, right? It's similar to like depositing or withdrawing USDC on Coinbase, if that makes sense. So the chains are just kind of supported with deposit withdrawal pieces of infrastructure.
Communicate with your secure enclave. Is it like layer 0?
The enclave itself just has like, nodes that are monitoring the state of each chain. So when someone deposit, similar to like you deposit USDC to Coinbase, right? Because you're buying the dip, you're not selling. Similarly to that, right? Like Coinbase is watching the chain. They see that your USDC was sent to like whatever address that's like personalized for you, so they know to credit your account. And then later when you want to withdraw, the enclave is running software that like can't be tampered with. So like that like you're only going to be able to withdraw as much as you like have access to within your account on the platform. So that's kind of the overview. Does that make sense?
Yeah, definitely. I do have to make a quick pause because this year we're excited to be media partners with ECC, taking place March 30th to April 2nd in Cannes. New for 2026 is the Agora, ECC's institutional forum. It brings together some of the most influential voices in digital assets and traditional finance for open, rigorous debate on the future financial markets. So the Agora is unsponsored by design, creating a space for honest, bias-free conversations you don't usually hear on stage. So please grab a ticket and we'll see you on the ground soon. That being said, we are giving away one ticket. The code for this is going to be the block free. That's THEBLOCKFREE, all caps, 100, capital A, capital X, 33. So please, hopefully you're going to rush the site and get your free ticket. That being said, Michael, I do have to ask you just to move the conversation along a bit about yield capture and how you view value accrual layers in DeFi. So it seems like this is like kind of a hot meta in, in tandem with vaults. So curious if you have any general thoughts there.
Well, I think it's a great question, right? I think this cycle isn't going to be about speculative token flipping. It's about yield as the organizing principle. And if you look at the evidence, pretty striking. The entire vault ecosystem is being built around yield capture. Every major DeFi protocol is designing around it. Morpho for lending yield, Pendle for fixed rate yield, Lido for staking yield, Athena for basis trading yield. Yield-bearing stablecoins are doubling. Institutions literally deploying capital through vault structures specifically to capture these yield layers. And it makes sense from value accrual standpoint. If you're a protocol generating real revenue, swap fees, lending interest, staking rewards, the question is how that revenue flows to token holders. And we saw Uniswap with they flipped on the fee switch. We see Aave and Hyperliquid running buyback programs funded by protocol revenue. The yield is the proof that there's economic activity happening, and the vault is the structure that's going to capture it and distribute it. So for the next few months specifically, I'd say, yield capture is going to be the primary narrative. Price appreciation is uncertain given the macro overhang with tariffs and the February deleveraging event. But yield is yield, and if you're earning 4 to 8% in a stablecoin vault or 3.5% staking ETH, that compounds regardless of which direction the spot price goes. So I'm pretty excited about it.
There's interested in these sophisticated yield strategies all of a sudden.
Well, it's a good question, right? Why is this happening? Well, I think a few things converged at once. So first, the infrastructure matured. ERC 4626 gave us composability. Morpho, Euler, Gearbox, Pendle, these protocols can now be stacked like Lego blocks. You can simultaneously lend, provide liquidity, stake, restake. You can do all these things in the same unit of capital. So that wasn't possible even 2 years ago. or at least it wasn't without custom integration for every combination. So first, the tech got there. Secondly, institutional demand finally showed up. Curated vaults, I think, have grown about 28%. I think it was like 28% in TVL over the last couple of months. And it went from about 150 million over the last 12 months to something like 4 billion right now. And that's not just retail degens. That's real capital seeking structured, risk-managed on-chain exposure. I mean, Apollo is a great example. They're running a private credit vault at 16% APY. Coinbase pushed 350 million in Bitcoin-backed loans through DeFi, through their DeFi infrastructure. Bitwise and Morpho launched a stablecoin vault targeting, I think, 6% APY for institutions. So so institutions are finally showing up. Third, yield-bearing stablecoins have exploded. Their supply has doubled over the past year. When your stablecoin itself is generating yield, not just sitting idle as a cash proxy, it becomes a core collateral type, a cash alternative for DAOs, corporates, and the rest. So that's a whole new capital layer looking for vault strategies. And so, yeah, I think those three reasons really make a big difference here.
Yeah, Michael, I was curious with sort of, prices being a little bit down in crypto, definitely quite negative sentiment on the timeline. Does that change Galaxy's approach to crypto these days? Like, is it, maybe reducing activities, or is it sort of ramping up or focusing on different areas?
It's a great question. Galaxy is structurally and ideologically long crypto. This is not our first bear. In fact, I would argue that this is the most bullish bear I've ever been in. And it's the most bullish bear because the news is very bullish. Every indicia of good news that you could possibly look at is happening right now. Institutional adoption, regulatory support. Everything is actually aligning on the biggest, most important macro catalyst for crypto. But price action, of course, is bearish. So we've got a little bit of a decoupling there. That decoupling, I think, is going to redound to the benefit of crypto long term and medium term, frankly, because I think it's going to be a shallower bear. So no, Galaxy is not changing its strategies at all.
Sorry, Matt, before you jump in, I was just going to say, Michael, yeah, I tend to look for some Alex Thorn hopium on the timeline to get me in good spirits whenever I'm feeling down. That guy knows how to bull post like nobody else on the timeline. But sorry, Matt, any thoughts you want to jump in there and add to?
I was going to play devil's advocate and say how I don't think credit products on chain make a lot of sense because they're so much more complex than things like equities, and 16% is not the risk-free rate for a reason, and there is some risk, but the market's actually much more interesting to talk about. So I'm curious, like, Michael, do you think you mentioned like a shallower bear? Do you think it's like shallower and shorter, or one or the other? Like I personally have seen every 4 years like a top in Bitcoin, right? And so I'm like, okay, like 4-year cycle still seems like pretty intact to me, but also every bear is like way shorter than the prior bear, right? And like slightly shallower. Do you think that structure still holds true? Do you think this is genuinely like we draw down 50-ish%, like that's it?
So I'm going to answer that question after I respond to your point about credit on chain. So while I agree with you to some extent, I think on-chain credit is one of the most exciting and powerful phenomena that's happening right now. And the reason is not anything special. It's just that finally we have the infrastructure and we have the interest from institutions to make the highest and best use of blockchain technology, which is to use smart contracts to design credit products. One of the big risks in credit, of course, historically has always been that it's pretty opaque. Let's just take a mortgage-backed security. Historically, from 2008, but before 2008, but since then, MBS is pretty hard for most banks even to decipher. I mean, the Basel III Accords, which were providing some regulation for systemically important financial institutions, those rules require banks to actually interpret the rules for the regulators, because what the banks are doing is so complicated. And so putting those products on chain where they're transparent and the rules are auditable and in many cases immutable, I think is going to make for safer credit products. In terms of your question about the bear, it's anybody's guess how short it will be. The real question is whether or not this bear is a result of just simply the basis trade expiring, or whether it is because of sort of a lack of interest from retail. Right now, you saw leverage get flushed out. Leverage got flushed out, and retail might just be, amassing their war chest, ready to go back in, or they might be a little cool and might be a little uncertain. And fear is fairly high right now. So it's going to depend on the retail's appetite to get back in, from my perspective. So that was a dodge of your question. I don't actually know how long. I would hope that the bear would be shorter, right? I think it will be shallower. I mean, a $65,000 Bitcoin price is like not that bad by historical terms, right?
Yeah, I mean, I think we're used to seeing, 70-80% drawdowns during the bear. 65 is less than 50.
I mean, what like last bear, what happened? FTX fell off a cliff, and that was preceded by Celsius falling off a cliff, and that was preceded by Terra Luna crashing, right? Those were real catalysts that gave everyone pause about entering crypto. There haven't been any such events that have happened, and even 1010, which was quite a washout, did not actually affect any protocols.
Yeah, I mean, it's very interesting, right? Because only recently have we seen a lot of these token prices really did start to go below their 1010 lows. Like Optimism is one that I was looking at the other day, and I was like, surely this is a great short. Like, which is I feel like I wake up every morning, I brush my teeth, and I want to short Optimism, right? And it's just like it's so far. It's like below the lows of 1010. I'm like, I can't reasonably short it here. It can't go that much lower. But it is anyone's guess. I think if I had to bet though, I do think it's gonna be a lot shorter. I think it's gonna be deeper than most people think. I think we see Bitcoin go into the high 40s. And then I think we're probably back at all-time highs by the end of the year. Because the fundamentals are truly extremely bullish, right? And every cycle that crypto survives, a lot more people believe in it again. And so I think the reason that we continue to see like the slow washout, like the slow kind of selling off, is actually the thing that you were pointing to, which is like we haven't had a catalyst to like crystallize a lot of people into like, shit, I guess I might as well dump my Bitcoin because it's going to zero, right? And so I think every passing day that Bitcoin doesn't catch up to gold, every passing day that Bitcoin just kind of like stays flat or lingers a little bit lower, is a day that somebody incremental gives up. And so I think like we're gonna see like slow bleed until like finally like the sellers are out of tokens, like to like state the meme. And then at that point we rebound like I think way faster than most people expect. So I think we'll go into the 50s. I don't know if that lasts more than a week, to be honest. I think we'll probably touch 49 and then like off to the races. But no one will ever remember this if I'm wrong, so we might as well make predictions.
I like it. You're injecting hopium straight in my veins, Matt. Much obliged, sir. But one thing I was curious, I mean, we talked about the 1010 crash, maybe, what was it, February 5th as well. It was a crazy, just acceleration downward price action. I know personally, I had a lot of people in my just family and friends, whatnot, calling me, asking about crypto. You guys are two heads of DeFi, so I can imagine your phone's ringing probably a lot more often. So what were those conversations like from people who don't necessarily reside in this crypto bubble that we exist in?
Yeah, my mom gave me the once a year call when crypto goes down and says, "What's going on with crypto? What's going on with the Bitcoin?" That's what she asked me. What's going on with the Bitcoin? Yeah, I mean, my friends were actually more pissed when I did tell them to buy Solana at like 250 last year around this time. So they have not been pleased with me over the last year. But yeah, I mean, it's when you're in this business, it's nothing new. I'm not at all phased by it. This happens all the time. I see it as tokens are on sale right now. So, but you have to evaluate. Everyone's got a different risk appetite based on their circumstances. So you have to be safe. I don't want to be flippant about it and say that like it's not a big deal that prices go down. A lot of people are underwater right now on their assets, and yeah, there's a lot of pain that is happening, and you just you got to remember that history paints one picture on this stuff, right? 2017, I thought it was over, and then 2020 happened. In 2020, I thought it was over, and then and then 2022, and then by then I was like, all right, this thing's not going to die. So I'm not at all worried.
Nice.
My mom, shout out, has been calling me every day for like a year now, asking if she can fucking buy Bitcoin. And like every time she asks me, I'm like, not yet. And early Feb, I was like, okay, mom, you can start buying now. Make sure you stay, don't buy all at once. And I called her. So I was actually on a plane on my way to Consensus Hong Kong, which was so annoying because I didn't get to bid any of the liquidations. But and I like didn't have Wi-Fi because Cathay Pacific has the worst Wi-Fi in the skies. And good food though. And like my mom, I call my mom immediately after I land. I'm like, yo, did you see like you can start buying faster, right? And she's like, I got to fill at like 62K. I'm like, nice, go mom. And a lot of the smartest people that I talk to are doing the exact same thing right now. They are all calling their friends and saying, hey, remember when I told you not to buy last year? You can start now. And it's like pretty mixed, right? A lot of people are like, why wouldn't I just buy like SanDisk or like, Nvidia or gold? But like a lot of people are like, oh good, like I can strategically buy Bitcoin. I've seen this before. So yeah, like I do think that's why I'm so bullish on like by the end of the year timescale is just like everyone has seen this before, right? Like if you were ever gonna buy Bitcoin, you know that this happens. And so hopefully you didn't get like over your skis last year or you'll be like burned and then wait till next cycle. But if that's not the case, like you're probably allocating right now.
Yeah, I mean, I did get a little nervous at the start of the year when my boomer father, who knows nothing about crypto, called for 165K Bitcoin by the end of the year. But who knows? A lot has
Oh my God,
changed
let's
since
start it on
then.
Ripple.
Oh man, Ripple's one of those ones. Everywhere I travel around the world,
So good.
just you talk about crypto or Coinbase, anything, any type of crypto related discussion. There's always a boomer goes, "Oh yeah, XRP, right?" Just that's a completely different animal in my book. But
It's going to 100.
hey, that's what 4chan told me. So we'll see if that remains to be true or not. But overall, I mean, it's been very, very interesting because it seems like now is one of the best times to build in crypto. The news cycle, like we said, has been basically phenomenal. But you have that bifurcation, as you called out, Michael, between actual like depressed prices and maybe people are just a bit exhausted given AI is getting so much hype news and positive appreciation, whatnot. So definitely an interesting time overall in crypto. But yeah, guys, any final thoughts? Because I know we are a bit over time that we had allotted for the discussion.
Well, I will say on your last point, I do think AI is creating a little uncertainty in the market, to say the least. And that uncertainty is manifesting, I think, in two big ways. One, young people are not sure if they're going to have a job in a few years. And so they are hoarding cash. Young people are the most likely to buy Bitcoin. And so Bitcoin prices are not seeing any price action because young people are not in the market. And institutions, while they like Bitcoin, or they're starting to like Bitcoin more, they're gravitating towards what they know and what they think is safe, which is gold. Now, what does it say about the Bitcoin thesis as a store of value? It's not great. I would love if Bitcoin was going up while gold was going up for that thesis. But that said, I think that we are, markets are, it's a very interesting time, and I think that with Bitcoin has a problem relative to gold, which is that it's too small, right? So because it's so small, it's very volatile, and until it gets bigger, till the market cap grows, it is going to be hard to make the case for Bitcoin as a store of value all the time until it starts going up. So I think that that we need to start seeing that thesis come to fruition. I am seeing a lot of institutions wonder where the store of value thesis has gone. Nobody really has a good answer for it right now, because for people like me, and I'm sure people like Matt, Bitcoin's obviously a superior store of value than gold, but the market is saying otherwise.
Understood. Anything for you, Matt?
I mean, these are the best of times to live in. The market is wrong, right? Like, I like, let's not forget, like, a year ago, Bitcoin was still chilling, I think, like around 100K. Sol was still at like $200, and every alt had sold off like 80%, right? And at the time, we were all, I personally, I was nervous that we would never see another drawback or like drawdown in Bitcoin again, right? We'd never see another pullback, and like, I don't own enough Bitcoin. And that was the number one thing on a lot of people's minds for like a solid month there, until I guess it was like a little over a year ago, because like during December, I remember Bitcoin dumping to 77K, right? We didn't think we would ever see cheap Bitcoin again. And cheap Bitcoin is like the dream, right? Like half of us in the space are like here because we like can't get over the fact that we didn't buy enough cheap Bitcoin. And if you have conviction, this is like, what a great time to be alive, right? Like the worst thing is waking up and everything you want to buy is expensive. The best thing is waking up, everything you want to buy is cheap, right? It's just like about patience, I think, at this point. So like, I'm not like buying all I can hand over fist at 62K. It's like a very awkward bottom, right? Like I don't think it's the bottom. But like, yeah, every piece of news we could possibly get is so positive that like, if you ever even had doubts about this stuff, you don't even have a reason to doubt it anymore, other than the fact that the price is not doing what you want it to. And that's how markets work, right? Like they're kind of cruel, and the funniest thing is like the most likely outcome, and that's for Bitcoin to not go up when gold goes up, and then for at some point Bitcoin to just rip people's faces off going up, right? So I'm immensely grateful to be active in the market at a time like this where there is opportunity, because to your point, Michael, like this isn't guaranteed. We're not necessarily going to get cheap Bitcoin every 4 years forever, right? Let's be grateful like for the chances that we get. And then beyond that, check out Ondo Perps at Ondo Perps on Twitter. Not for US users. That's my my other thing.
Nice.
Yeah.
Well said. Oh, sorry, go ahead, Tim.
I just wanted to follow up on one thing about AI. Like, I know we've seen X402 come out from Coinbase, but an hour ago, CoinDesk reported that MoonPay has now also created a non-custodial permissionless infrastructure for AI agents to move money. How important or how sort of valuable is this as a product? Like, are we going to see more and more companies launching sort of AI crypto infrastructure? Like, how much demand do you think we're going to see for that? And is it like a super short-term thing, or is this like a long-term play?
I mean, do you think these products are getting built because someone out there is like, man, I really wish I could have my agent sign something, but oh no, there's not enough infrastructure there. Like, I think it's like primarily like trying to hop on the bandwagon personally. Like, I think if you've really ever tried to get an agent to sign something, like you found a way to do it that's not safe, you found other ways to do it that are reasonably more safe. And those ways are as safe as anything that any of these companies comes out with. So actually am pretty bearish on, like, it feels very hype driven, these kinds of announcements.
So wait, is the question, what is the question? Is it that, can you repeat it?
I had a few questions. Is this sort of a short-term thing or like a long-term play? How much demand is there going to be for AI agents, infrastructure to let AI agents move crypto?
I think it's just the beginning. I think within a year or 2 years, everyone will be trading through agents. In fact, everyone will be doing everything through agents. And so crypto, especially on-chain crypto, is pretty complicated. It's pretty messy. One of the biggest things that has held crypto back for a while has been, especially DeFi, has been how unfriendly it is to users. The user experience is not easy. And while wallets have done a pretty good job at making that a lot easier, it is still not particularly user-friendly. We've talked a little bit about our moms here today. Like, none of our moms, I venture to guess, can navigate a Solana wallet and bridging over to Ethereum, or God forbid they have to bridge through Arbitrum to get to Hyperliquid. So like, that's not the best user experience. AI agents will abstract that away. And I think that's going to be a big thing for the entire space.
Understood. And I guess when you think about the value accrual, does this go towards these foundational models or towards the builders of these applications on top of these? Are they the LLM wrappers? Just kind of curious how you think about where that is. I know it's very like on the fly, kind of random question. So any thoughts would be helpful.
What do you mean?
Like with respect to the builders of these different AI agents, are they going to go to the people building the frameworks themselves? Does the value accrue to foundational models? Are they going to be to the individuals utilizing these agents for trading? Like, where do you see the most value capture in this like AI stack overall?
Well, the most capture is always going to be with the frontier models that are going to be able to receive more and more of our data and train better models with that data. I think there will be, for a short period of time, businesses that can build agents that can trade and people will use them. Of course, anyone could just then go to Claude Code and have Claude Code write them a similar agent, presumably. And so I think that business will not really redound to developers selling these bots. I think everyone will just be building them themselves.
Understood. Anything to add there, Matt?
I mean, yeah, the crazy thing about AI is like the value really is like consumer surplus, like more than I think any other technology. That's part of why we're all really having to wrap our heads around the implications, is like the huge amount of the value accrual is at the end user level, right? So yeah, I think all the more so for something that's like such a purely financial technology like crypto.
Understood. I just got to figure out how to get equity in Anthropic or OpenAI. Sorry, Tim.
Yeah, Matt, I just wanted to ask. I just saw just another, breaking news story, but Binance has brought back tokenized stocks trading through Ondo Finance. So they've listed a bunch of tokenized US equities on its Binance Alpha platform. So what's happening there?
This is fantastic because of Binance. Like, it's not for US users, but also Binance helps us gatekeep that too. So my compliance folks will love this question. I mean, I think this is really cool, right? These are tokenized equities from the Ondo Global Markets platform. And, one of the major things that we've seen is that a large part of the user base that doesn't have good access to like a brokerage account, like off chain, like in the US, we have access to Robinhood, right? Like, we don't need this product. A large amount of the user base, though, like globally, doesn't really interact on chain, right? And so distributing these assets on chain is like not that interesting for a lot of our target audience. It really is the centralized exchanges that we need to partner with. And listing our assets on Binance Alpha is like a huge step in that direction, right? Where for a lot of people, they trust Binance. Like for a lot of people, Binance is their bank. Binance is their brokerage account, right? It is their investment account or their savings account. And so being able to buy and sell US equities is really meaningfully important. And we've done a lot of work to try to optimize the liquidity flow and the way that tokens can come in and out of the exchange and get minted and redeemed. And that's like probably more of a technical talk, but broadly speaking, what this means is that like Binance Alpha users in a lot of different countries can access US equities, some of them for the first time. Most of them, this is by far the cheapest way they can.
Understood. And yeah, Tim, thank you for staying on top of the news wire. I was so just like locked into this conversation. And before,
me too, thank you.
yeah. And just for the compliance folks who are listening, as well as the head of comms, nothing on this podcast you say is or was financial or investment advice. Make sure to always do your own research. That being said, I do want to say that's all the time we have for today, and give a huge thank you to Michael and Matt for joining us on this episode. As a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thanks. See you next time.